I'll put a tweet out now.
Welcome to the Predictive Playbook for June the 15th, 2021. This is a special edition with the financial guys, and I guess we're the financial guys and professional bettors at WagerTalk and Sports Memo. We're only allowed to say certain terms like catch the falling knife, capitulation, slippage, and all those other good terms that Tony Finn, this our dear friend and pal, has no clue what it is that we're talking about.
I still giggle when I hear slippage, and that was mine last week. I brought that one to the party, but just because. So here's a big picture idea I had, John. I got to get this out because I have so many ideas. I got to start writing them down. I'm going to forget this one. So after we did that show last week, hopefully, or crazy, one or the other. There's always that fine line. Tony Finn fits both, by the way. But speaking of Tony Finn, speaking of slippage in our terms, I thought of this last week. We need to do an episode, or maybe a daily episode, where we give a financial term to Tony Finn. He has no prep time, so we have to catch him off guard. And then we have him try to define it live on camera while we're doing it. Slippage is the one that actually made me think of that idea. But
I might do that this afternoon at 4 o'clock.
Okay, just do one. Don't use them all up. Don't use them all up, though. You got to save some for when I'm on maybe Friday.
Yeah, absolutely, because he does the extradition countries, and he names one of those. I think we're up to 18 now.
Oh God!
He claims there's 34 of them, and he knows them all personally. That's Tony, but that will blow his mind. 'Cause I think I mentioned that very briefly because I was scared to death what he would say, and that's why we kept it on the sports topic. But it'll be hysterical. We'll come up with a little jingle for it. Like the financial. Oh, we don't have to do that because I was teaching them Latin on the one show. So we can just take this as Tony Finn's new word of the day.
I mean, we could do it and then have Tony give his guess, which will be completely in left field, and then we'll have Rob, who's usually the level-minded one. Rob might not know, but he'll give it a punter's chance, and then we can actually give the real meaning. I mean, there's so many good ones. Slippage. You got to save slippage. You can't use that one out of the gate. Although I don't know, that might be the one to use out of the gate. That's by far the best one.
Yeah, maybe we should just warm them up a little bit.
Backwardation would be fantastic. I mean, he's going to say something unbelievably politically incorrect with that one that's going to upset an entire group of people out there. I can only imagine. Contango. He'll say something about a dance. I mean, capitulation. It'll be something about a murder. I mean, this just catch a falling knife. There'll be another murder. I mean, oh God. I'm actually getting excited just thinking. I'm actually just running his answers through my head right now and having a good time. So maybe that's also the sign of genius or craziness. I don't know.
Yeah, well, he's pretty smart himself to come up with some of the clever answers that he comes up with every single show too.
He's a clever guy. There's no doubt about that. Yep. Too clever.
So we'll start with the MLB run line play of the day, and this is actually a 4-unit play. But I'm the $2 man at Sports Memo, so that's the only play that's up there. But my subscribers do get this play. This play is not for sale, and I thought I would share it with everybody. So this is a pretty good one. Chicago Cubs at New York Mets tonight, 7:10 at Citi Field, and it's pretty straightforward with 4 requirements. Bet on road teams using the 1.5 run line. Our road warrior has a highly effective bullpen with a 3.75 or lower ERA. The host has an outstanding starting pitcher on the hill, sporting an ERA of 3 or lower, spanning his last 10 starts. And the host, which isn't hard to do this year, is batting .250 or lower on the season. 86% winning bets on a 42-7 record last 5 seasons. $100 better, 72% ROI. That's up there with our BitCoin trade, Steve.
Wow.
And $100 better backing this angle blindly, just playing it when it's active, has made 3,640 smackers over the last 5 years. So all told, bet on the Chicago Cubs using the 1.5 run line over the New York Mets. And that's my free pick of the day. And I know you have one you want to mention as well, Steve, and then we'll get to the BitCoin.
Yeah, well, we're both fading the New York teams tonight. My free play is going to be going against the Yankees, actually, with the Toronto Blue Jays. I used this earlier today on MLB First Pitch on WagerTalk TV. I recommend checking out the full episodes. We broke down 4 games, including this one. But I like the Blue Jays minus 125. 2 starting pitchers which are pretty equal, Montgomery, Ryu. Yankees are known for the strong bullpen, but Toronto actually has decent numbers this year, especially considering they've been playing in some hitter-friendly minor league parks. But Toronto's the better offensive team. And tough loss last night. What kept this off my best bet card? I have 2 strong best bets at WagerTalk.com. This was a game that was just a bit outside, as I like to say, for making the cut. But the reason being because they did have a walk-off loss last night. They tied it up in the top of the 9th, 1-1 at Fenway, and then lost on a walk-off by Boston. That's always a concern, traveling back without rest. But equal pitching, home field advantage. And by the way, these minor league stadiums, John, they're now up in Buffalo. They started down in Florida. Now they're back at the Buffalo Blue Jays like they were last year. I think it's a unique home field advantage for them. And the Yankees are just not a great offensive team this year. And Toronto, keep in mind, 18 runs on Sunday. So it's not like they're not hitting the ball well, even though they were off a little last night. So I look for the Blue Jays to bounce back tonight. Made that a free play at minus $1.25 because it's 7 Eastern.
Yeah, I love it. And, as our buddy Rob Vino says, and I love it when he says this, real quick, Steve.
You get the stopwatch.
Yep. We've had some.
Just one. That's
it.
Another good word. That's a good word to give Tony also.
Yep. The Yankees, they're the first team I can ever remember trying to figure out what the heck is going on with them hitting wise. Okay, so they have very good, walk ratios, percentages. Their line drive percentages are high. Batting average is not anywhere close to being horrible, but what is horrible is they are way off in expected runs scored versus runs scored, and they get guys on and they can't get them home. And I've come to the conclusion, and I'm interested to hear what your opinion is, that we, in a really rare anomaly, have 9 guys in the same lineup that just happen to be paid big bucks by the New York Yankees that are underperforming. I don't think they're regressing. They're just underperforming all at the same time and not getting those hits to score RBIs. And now the starting pitching is only averaging barely 4 innings a start. Do you think that is the issue, or is it much greater than that? I don't want to bring in the locker room stuff, but there's definitely something wrong.
Well, I'll tell you another reason I left this off the best bet card, though, is the Yankees offensively actually have been hitting the ball over the past week. They got shut out 7-0 Sunday in just 4 hits. But their 5 games before that, they had 10 hits or more in every one of the 5. They put up 5 runs or more in every one of those 5 games. Yet, like you said, John, they went just 2 and 3 straight up. So,
right.
I do think I think hits, first of all, is a good barometer. I'd like actually something you and I can do a project one day. I got a lot of ideas, like I said, in my head, and a lot of baseball systems and stuff I'd like to test. But hits are at a record low this year. 150-year sample. Hits and batting average are lowest they've ever been. Strikeouts the highest they've ever been. By the way, they just announced today, next Monday, June 21st, it's going to be the crackdown day. 10-game suspension for anybody caught with the substance on the ball. Joe Ranieri and I talked about it this week. Thought it was supposed to be this past Sunday. I guess not. Now it's next Monday. We'll see when they eventually do that, are they going to do a superstar? Are they going to do a bullpen guy, a middle reliever? Who knows? But anyway, big picture takeaway for me is until we see something, I'm not going to factor that in as much into my handicapping as I was planning. But I think offense will be up here in the near future. It's also the summer months. So we'll see if the Yankees can keep pace. But yeah, something's just not right there, and it's catch a falling knife, right? They were the third favorite overall when the season began. I'm not going to try to guess when they turn things around. I need to see it because they're going to be a big money burner until they do so because they're a very public team. And, that's why I like Toronto, and I think we're getting them at a cheap price. By the way, on the season, Yankees minus 16.5 units despite being above 500. Blue Jays, 1 game above 500, minus 16.5 units. Blue Jays, 2 games above 500, plus 2.5 units. That's almost a 19-unit difference, even though they're only 1 game apart in the standings. I mean, that's pretty remarkable over just 64 games or so.
Yeah, that is. And that reminds me of another topic that we should write down and do is, what arbitrage is in the financial markets, which is another new term for Mr. Finn and Mr. Vino.
Such great terms.
But I've actually applied it to baseball, where I haven't done it yet, but I do it the second half of the season, generally speaking. Never this early. Maybe it starts about now. But you catch 2 teams heading in opposite directions. So to your point, had you bet on Toronto and bet against the Yankees every single game, that would have been an excellent arbitrage, because you're selling overvalued Yankees, you're buying undervalued Blue Jays, and I have done that. And you can do it with you want to do it with more than pizza money, but we work on a 3, 4, and 5% of your bankroll type of money management technique. So to do 1%, 1.5% on these plays every single day during when the arbitrage is active, we'll have to start mentioning that on the show, and in addition to Bitcoin and everything else, because it ties right into the market. And it's where I learned how to do it. You sell 10-year notes against 30-year bonds. Expecting the yields to work in opposite directions, and if it does, you're right.
Well, I mean, also that's what keeps the markets efficient. There's a lot of talk about markets, or efficient market theory has been debunked a little bit, at least by the trend followers, and that's what I like to consider myself. So trend following theoretically should never work, but it's worked for decades. John Henry bought the Red Sox with his trend following profits, just to put it in perspective. George Soros, say what you will about him one way or the other, but he became one of the wealthiest guys in the world by being a trend follower. And now he hates capitalism, even though he made all of his wealth from it, which is kind of ironic. Topic for another show, maybe off the air.
It is.
Yeah, I mean, trend following should not work. If the markets were efficient, just to put it in a nutshell real quickly, GameStop never would have been 400 whatever. AMC wouldn't have been 50-something the other week when all the analysts say the real price is $5. And last I checked the other day, it was still 40-something.
Oh, so, we'll show that chart. It's up pretty big today again.
Is it? Yeah, I mean, and by the way, long term, I do think the markets are efficient. I think that's what someone gets wrong. I think that's where the market efficiency argument is wrong. It's too short-sighted. It's just like 3-point shooting over the course of a season. The true 3-point range is going to come out for a team, but they can be 70% in one game and 10% in another game. And
yep.
And you as a big research guy, John, you know this better than anybody. I mean, sample size is what gets most people. It's like, I'll give you an example. I mean, I've been running really well here the last few weeks, and did a 3-day special at WagerTalk.com. And most people got on Saturday or Sunday. So it's basically Friday through Sunday, Saturday through Monday for most people, depending when they got on. Of course, my 2 baseball plays on Saturday both lose by half a run. I had the Rays. They're up 5-0. They win 5-4 in the run line. I have over 9.5 in the Red Sox game. It's 7-2. I mean, so so most people, you're up against it. Basically, I went 2-3 instead of, and I think I went 1-4 instead of 3-2 for the weekend by half a run. I mean, that's a huge swing, percentage-wise, over 5 games. But it made no difference over the last 2 weeks. But a ton of people jump on that. That's why I cringe doing these short-term offers. The week before, I had done a 1-year special because I'd lost my. Don't want to jinx you, but I'd lost my $2 play, and I went 11-1 on all NBA plays after that. So it is the kiss of death. So hopefully you and Tony both come through big tonight with $2 Tuesday at sportsmemo.com and wagertalk.com. But it is the kiss of death sometimes, and so many people never got back on board and missed an 11-1 run. So it kills me.
That's exactly right.
It drives me crazy.
And I took a page out of your book, and the Sports Memo people were, they're so great to work with, number one, and WagerTalk, and they came up with this nice little gem, which is, to your point, making a commitment to join me, right, specifically. Or, if you had a similar ad, it'd be to join you. Like, don't let one day dictate whether you think the guy's brilliant or whether you think the guy's a complete fool. Because both you and I, we're not the elder statesmen of the industry just yet, but we've been doing it for an awful long time, both the trading and also the sports end. And there's so many similarities. We could have a show for the next 50 years every week, and we wouldn't be able to cover everything. But as you can see here, the role I'm on right now, humbly said, because I know the betting gods, I love them dearly, but they're very fickle. And they get pissed if you start bragging about how great you are. I'm totally convinced of it. I've seen guys make commercials and brag about, I'm on an 80% run, and I'm the best in the world, and all of a sudden you check their record a week later, and it's like, whoo. I mean, it's worse than Bitcoin going down.
Yeah, well, I mean, it's not a fluke. There's something to that, and I mean, there's probably a way if you really, here again, why most people don't win, even if you give them winning information, is here's how the average sports bettor, they hop on a hot handicapper, they jump off a cold capper,
Yep.
If it's going to be like, if we have a 55 to 60% long-term edge, which we have, then if we're hitting 80 or hitting 20, we're going to revert back to the mean at some point, which is 55 to 60%. So you can't predict when that's going to happen. And I've had some runs would go on weeks hot. I've had some runs that are over quick. I don't even really believe in the hot and cold streaks. They're just statistical flukes. I mean, that's all it is. It's
right.
just short-term
that's
random
exactly
samples. Right. But people don't realize that. And they do the actually opposite of what, instead of just riding and hitting 55, 60% winners over the course of a season, they jump off after a downturn, they miss the 80% run, and then they have buyer's remorse or fear of missing out, or they get suckered into the hot streak. They jump back on, and you hit 40%, and they've lost on both ends of it, even though everybody else is like 60% still. It's remarkable how you have to try to be that bad. There's some people out there that can do it, and they do it throughout life in a lot of different ways. But it's the same thing with like Bitcoin. It would be like selling at 30 and now buying back at 40. It's the exact opposite of what we said. We said if it breaks down below 30, you maybe want to get out. Or if it goes above 40, you get in. And that's what's happened. It was in that channel like we've talked about. And handicappers get in those channels. They run hot and cold, and it's just it's random noise. What is it? There's some books out there by like Talib. What is it? The Fooled by Randomness or whatever. Some great books.
There's the Random Walk.
Random Walk. Although now the Random Walk you got to be careful with, because that's that whole...
that there is no reason
it's almost
for
like,
what happens.
Yeah, it's like the extreme. You got the efficient markets and then the Random Walk, and they're both a little wrong. They're both a little right and a little wrong. But that's a Mackle. I've got that on my shelf right over here. That was big one. That was 70s or 80s. I mean, there's been several editions of that. But see, there again, it's a random walk in the short term, but not in the long term. See, that's where the efficiency argument comes in. I think they're both right, but they're both wrong depending on the time frame.
One of my favorite books and the most influential books that I have in my my library, I believe the copyright was 1912, and it's The Art of Contrarian Thinking. And that impacted me in a big way, because all the examples through history where, human beings are smart. I mean, we're not dummies. But when everybody is facing the same direction, it for whatever reason, the forces of the universe go the opposite direction.
Well, it's because life's about balance. I mean, no matter what it is,
true.
whether it's nutrition, whether it's sleep, whether it's play and work, it's all balance. And there's a balance in nature. I'm not a big tree hugger. You know me. I'm practical, but I'm not out there hugging trees. With my la 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 la. But there's a balance, and there is something to that. I've come to realize that. The other thing I'll point out about all those, is Jesse Livermore, also another great one from 100 years ago. But here's what's funny. I've always been a contrarian guy. I started in 1996 as a full-time professional handicapper. And as you know, John, back in the 90s, being contrarian in the NFL was the way to go. And I had a lot of systems that I would blindly lose when teams underperformed for 2 or 3 games against the point spread. They were great plays. That did not work as well after the 90s. And it doesn't really work well now. So as a trend follower with the financials, I'm really a momentum guy. So it took me a long time. It took me 10, 15 years to get comfortable with momentum and trend following, because I've always been a contrarian by nature, and I agree with you. I think in the big picture it does work. But I've come to realize in the markets and also with sports, and baseball is a great sport because it's daily, 162 games. It's that catch the falling knife scenario that you got to be careful with. And there again, it's about time frame. In the short term, momentum works. And that contrarian, you can be wrong a lot more before you're right. But big picture, the contrarian stuff plays out. You just have to have your time frames right. But it's a good transition to Bitcoin. I mean, because you've got that one indicator where it literally, the only time it bottomed, where it really twice. And they can see it there on the right of that chart there. There's two little blue dips there at the far right there.
Right there.
I mean, that was the capitulation moment on that Wednesday that we were doing a show when it hit. It plummeted $5,000 in like 15 minutes that Wednesday morning, the 19th. That's the kind of stuff I look for, is the extremes. Because the momentum can be going, like, look at the momentum from October through April. I mean, look at those 6 months. Yeah. So, I mean, you weren't trying to be contrarian back then. You were going to lose a lot of money when it went from 10 to 60.
There was no reason to try to short it or take profits. But when we got in here and got that engulfing candle, and then we got it again, and you had the bearish divergence, by lower and lower peaks. There's your max. But even though prices were going higher, that was increasing the probability that it was way overvalued. Each one of these little peaks in price making new highs, not confirmed by the indicator, was a sure sign that this was going to happen at some point. You just don't know when it is. That's why you have to follow the story. The chart tells you a story here. But then right here, this is the bullish divergence that occurred. So you have a retest right here of this inverted hammer that you and I talked about before we came on the air. But the technical indicator here, and I don't care whether you're using something complex like I have here, or if you're using just a regular RSI, relative strength index, it doesn't matter. You get these divergences where the indicator does not confirm the new low, and look what happens. It's not rocket science, but you have to be objective. You have to allow the chart to tell you what the heck's going on. You can't be saying, well, I don't know, this one's not going to really work, so I'm already long, I'm going to stay long. I mean, that's where people get in deep trouble. I'm going to pull up AMC here too.
Yeah, and by the way, on that Bitcoin chart, I just want to remind people, that's the futures markets. That's why you see that gap over there about a month ago, because Bitcoin theoretically should never have gaps because it's trading nonstop. But keep in mind, over the weekends, it's a cash market only. You cannot short it. I don't consider that a real market. That's why, unfortunately, I cannot short Joe Ranieri's doggy coin, because you can only buy or sell it. You have to own it in order to sell it. But these are the futures markets, and there's no question these big gaps are happening on Sunday night, 6 p.m. Eastern, when the CME reopens. And they've been very telling. For something that's such a wild market, man, these support resistance levels have been good. And what we're seeing now is the breakout above 40. As I've said for weeks here on this show, that if it breaks above 40, that's going to be my new long. I went long last night for my other indicators, just happened to coincide with the breakout, which I like, by the way. But that gap is around 45 to 47 range. I would think that's probably where it's going to go try to hit. So I think if anybody wants to take profits, that's where you're going to take them. But I think there's a little bit more for it to run.
This is today's actually a little bit of a concern, because that's a doji, and it looks very small, but that's because you have a massive candle here. So I just enlarged this, and now you can see here's where you had the capitulation. Indicator retested it, no new low. You chop around, consolidate the oversold condition, and then it retests the low here, like I said, and the indicator is nowhere close to making a new low, and that's where you got at least the signal to cover the short. And you actually went long.
That's the thing. I mean, keep in mind, too, for people that aren't as technical as we are, this is all price action. The price is the only truth in the market. You can agree or disagree with it, but it's 100% accurate. Price is never inaccurate. It's always exactly right at that moment, and then it's wrong a second later. But, if you look at what John's saying there on that second candle with the hard wick down, basically that exhausted all the sellers. You go back to May 19th, the huge one, that one there, a lot of selling pressure, a lot of panic. That's panic because it happened so fast. And then look, everyone's treading for the next 2 weeks, really indecision. And then once again, we had a sell-off about 5 days ago, last week, on that other candle, on that doji right there.
Yep.
There's no one less to sell. So what happens in a two-way market, a zero-sum game, when there's no more sellers, or when there's an imbalance, it's going to run. And what we saw the last 2 days is we saw on Sunday and Monday, look at that gap here the last 2 days. It broke out, the breakout opened on Sunday because it ran over the weekend. But we have a gap there. Maybe in the short term it comes to fill that at 40, but I think it'll bounce and go up to 45, 47. So, once again, I'm long now, and I feel pretty good about it just from a technical perspective. I'm not a fundamental guy. I'm not long because I believe it's going to go higher. I'm long because my indicators have me long, but it's worked really well. It got me long at 10 in the fall. It got me short at 57, and now I'm long again at about 40, 41. So, knock on wood, let's hope it continues. And once again, John and I, this is our opinions only, what we're doing with our personal accounts. But it's been a very tradable market, to say the least.
Yeah, and the truth in the sports betting market too is that you have NBA games, for example, and whatever that line is right now, that's the truth. I mean, that line reflects everything we know about the game, know about the matchups, know about everything possible about that game, and it's millions of people that are contributing to that. It's not Wall Street's making a prediction that Bitcoin's overvalued, and it's not Vegas saying that XYZ team is going to beat Z team by 3 points. It's us. It's
the
all
market.
us collectively, right?
Right. The market is it. Yeah, I think we have to define that too, because we all say the market and we think it's these sticks and these prices. The market is people, either long or short. Of course, the one difference, as we've talked about the sports betting market, is that it's not a zero-sum game. There is not a buyer for every seller.
True.
I think eventually, 5-10 years from now, that will be the case with a lot of these sports books. There'll be exchanges. That's another big picture idea that's been floating in my head that I need to write down, that you and I need to talk about more. But I think that's the future of sports betting 5-10 years from now. But right now, the market is in the U.S. especially. And by the way, that is bigger over in Europe, with like Betfair and those companies. Yep. But I think the U.S. market is too infantile right now with all this legalization taking place. It's still the wild, wild west over here compared to Europe and England. With the sophistication of the bettors, they're willing to play these 25 and 30 cent lines for some ridiculous reason, even though you could get like a 10-cent line somewhere else, or a betting exchange would give you like 2-cent juice. I mean, you and I would salivate over that. You know how much more you win by default by laying 2 cents on games versus 20 cents? I mean, it's just pure math. It has nothing to do with picking the right side or anything. It's a discount. Yep. It's a sale price on every bet you make.
8%.
And that's what's happening now with the exchanges. The markets now are commission free. I remember back in the 90s, it was a $50 turn on each commodity. It would cost you $100 to get in and out of like one commodity. It's kind of hard to trade high frequency when that's going on. And that's why the markets move so fast now, because people can get in and out basically for free. And it's a legalized casino for a lot of these people.
Yeah, I remember those days well. Like we thought it was low when an institution, like a major bank, like say Deutsche Bank, would be paying $19 round trip for a bond trade. Now, round trip means you buy it, you sell it, or you short it, buy it back. The trade is complete for $19. But they were doing upwards of 3, 4, 5, 10,000 contracts. So that commission became big, but it was pennies compared to what the underlying security was actually worth. But now it's I don't even know what TD Ameritrade charges me just for a couple one lots. It's nothing. I mean, it's just basically nothing. Yeah,
the lows you get on some of the big boys out there. The one I use is a couple bucks. Depending on which future contract. None of them are more than like $2.80, $3 a turn. Half a turn.
Yep.
But once again, with futures contracts, they're levered, so you're getting a lot more bang for your buck, as we've talked about. But the big thing now is the commission-free stock trading is everywhere, and of course, most people get in recreational with Robinhood, but it's everywhere. All the other books had to match it basically because of Robinhood a couple years ago, and I still claim that these people that were not able to bet on sports this past summer when everything shut down, other than UFC and NASCAR, which are not heavy bet sports, obviously. They went to day trading, and the numbers bear it out. I mean, I've seen some numbers, not just Robinhood, but 4 or 5 of the big brokerage combined had like a 30% increase in new signups. I mean, that's like a third of the accounts over the summer. That's insane. And the other reason, of course, is because the stimulus money. People didn't necessarily need the stimulus money. They're buying refrigerators for their garages. It was hard as heck to find appliances last summer. That's because people were buying secondary appliances. They were day trading. And then what happens? The market runs and hasn't looked back. So people have actually made money doing this, which is unbelievably dangerous, by the way, because the best thing can happen to you as a new investor or trader is to lose. Same with the sports bettor.
Yep.
Best thing to happen is that you don't hit that 16 parlay right out of the gate, because then you think it's easy money to play parlays the rest of your life. And first impressions are a powerful thing to overcome. And
absolutely.
That's why I think when this ends badly, John, it's going to end really badly, and it's going to end very fast. When that panic selling we saw with Bitcoin 2 weeks ago on that Wednesday, magnify that across all these meme stocks, across all these recreational trading accounts. Can you imagine?
Yep.
And this is AMC. This is what I'm thinking. That AMC, by the way, is one to keep a close eye on. But that's the S&P right there, I believe, correct?
That's the S&P 500 futures, yeah.
I know it well because it's been a straight line up. I mean, look at the little pullbacks, healthy pullbacks, that trend line from the low over there in the left middle all the way up. That trend line has just been hit 5-6 times consistently. And that'll probably be the best indicator.
These Fibonacci's were made back here at that high. So now we're at a higher high than what my retracements show. But notice that we're here. Market goes higher. Indicator's not confirming it. And now it's starting to wane even more. So you have these successive lower peaks. And, you can almost like visually see the momentum is strong from here, right? You can see some of the dotted lines, linear regression, and then you get up here, you can see it losing momentum.
It's teetering out. It's a sideways channel, and it looks like it's going to roll over. What we often see is that head and shoulders pattern, which is a dip, another dip, and you can make a curve. You can kind of put a curving line over the top. You couldn't do that 4 months ago, like you were saying. And even this one, you can see the roll. Look at the left side there. It doesn't look like it looks like a curve almost. Like the candles are almost making like a curve. This is going to be a head and shoulders pattern. It's going to have to break below those two bottom candles in the middle of your chart there. So we got a ways to go, and we'll see if it's orderly or not. But I think what's going to really put fuel on the fire is when it breaks down 10 or 20% at some point, and then people start losing in these day trading accounts and whatnot. Then it's going to be a mass exodus, and that's when it's going to really go down fast. We're not there yet, but I think at some point in the next year we will be.
This candle is a little disturbing today because you have an all-time high and it's failing.
Yeah.
So when you have that price rejection,
look over about 3 weeks to the left there. Those other two top candles, the green and red one in the middle there. See how it's basically right above those. So it's almost like the second or third time, and then that green engulfing candle about 6 days ago. It's like all three of those. It's never exact. Like it doesn't hit the all-time high and then stop. It's always within 50, 100 points, but it's just showing exhaustion. And like you've got 3 or 4 good-sized candles on that chart that have never been able to get above that top. And then now look how teeny they've been the last 5 or 6 days. It just looks to me like there's not many buyers left. Let's put it that way. Like everybody has been long for like the last 8 months. At what point, and the stimulus is going to end soon. There's less money. There's inflation. At some point, how can there be any buyers left? There's only so much money. I know Fed's trying to make money unlimited, but there's only so much money in the world and the economy that can keep buying.
I'm just doing this for fun, Steve. Looking at the spiders, SPY. It's an ETF, biggest one in the world. It mirrors the S&P 500 and developed by Vanguard.
The first ETF ever in the early 90s.
It is, yep. And I'm just going to pull up...
So you're looking at the options?
Yeah. So here is... you probably can't see it because it's too small, but the index is at 424. So if you think that candle is going to be a sign of further declines, you want to go reasonably out of the money. And I only have a few on display here, but I am just going to do this as a little.
Now, of course, the one problem with put options on the S&P is that more people are going to by default have puts because more people are long by default. So they're covering it. This is insurance for them. So my theory has always been you're going to always pay a premium to go short on the options than you are long or puts versus calls. Would you agree with that? Just because this is the ultimate insurance for most investors, whether pros or recreational. It's an easy way to have some downside coverage.
This number over here is implied volatility. It's an equation that I actually tweaked, and I use that to do my in-game betting in the NBA.
Right.
So it gives me predefined levels in a plan before the game even starts. And this for the spiders, 15% is low. So we're getting these options very cheaply. So
VIX is up on the way today for the first time since last week. Even though the S&P is barely moving, the VIX has moved a little bit more, and usually they're.
And it could be because of this little, sell off the high, the rejection. But being 10 points out of the money here at 414, if you bought 10 contracts here at 1, which is the bid right now, it'd be $1,000 plus a little bit of commission. And if it drops to say 404, then that value of those options is going to be worth $10,000. So I'm not saying for a second that that's going to happen, but this to me, from my experience, is very attractive and a very it's like betting $1,000 on a game and be willing to lose it all. You're putting $1,000 out there.
It's insurance.
And but this I'm doing this more for a speculation.
Right. For you, because you're not just long. You're not just long the stock market like 90% of all investors are.
Right.
So for you it is different. But for most people doing this, it would be an insurance because they're probably in all their savings and all their 401ks. They're going to take a hit if the market drops. So, yeah.
And $1,000 for this insurance policy is exactly that. You're paying, like you pay for car insurance, like, $200 a month, and you're insuring a $50,000 car.
Here's a great way to look at it, John. I heard somebody say this. I can't take credit for it. I forget who said it, but if it doesn't happen, you just threw away $1,000. Yes, but you don't want. You hope it doesn't happen. Just like you hope your house doesn't burn down, yet you pay $1,000 or $2,000 every year for home insurance because you don't want to lose the $300,000, $400,000, $500,000 value, whatever your house is. So, insurance is a bet that you want to lose. It's the same reason trend following works in the commodity markets, because you're going against hedgers who want to lose. I love commodities for that reason. It's the only market you can play in where you can actually take the other side of somebody that hopes to lose their bet. That's how you get an edge, So we don't have that, unfortunately, yet in the sports betting markets. I wish we did.
Let's, just for the show purposes, this is a hypothetical little case study here. So we would have got filled at 1 now. And just for the show purpose, let's see where this thing goes over the next week. These options will expire Friday a week, so June 23rd. At 10 minutes after 4, these things are history. So they're either worthless or they'll have some kind of intrinsic value. So there's another word for Mr. Finn.
Yeah, that is a good.
Intrinsic.
I was gonna say, what you're doing here is you're paper trading on the show. We could tell Tony might be able to figure out paper trading. He might, although that'll probably come with some marijuana rolling reference or something. If I say
or
paper
a bathroom
trading.
gesture or something.
Exactly. Yeah. So that could go really bad as well. But man, you and I got to start writing down these words. I mean, we got about 10 or 12 in our head, but we literally could probably come up with a couple weeks worth of words.
No doubt.
That would really be funny. Actually, I'm getting a kick out of just imagining his answers without even hearing them. So,
I did have a segment for him because he always talks about his childhood in Kansas. So we did a little, like, it was almost like a trivia thing where there was 10 cities listed on my list and pick the ones that are actually in Kansas. So,
well, the bigger Kansas City is not. I know that for a fact.
Yep.
They're in both states, but the big ones in Missouri, of course, where the sports teams are. I love that one. I use that all the time with kids and stuff. I'm like, Kansas City Royals, where do they play? Kansas, wrong. Or Kansas City Chiefs.
No kidding. Yep.
It's a great one to get people. Apparently Kansas City, Kansas is like with just farmland, from what I've been told, because I've got some friends out there too.
And where are the Kansas City Chiefs NFL headquarters? Their actual corporate headquarters, not the practice fields, the corporate headquarters.
Now you're trying to trick me. Is that in Kansas?
No, not even close.
Not Missouri. Is it not even Missouri? Well, it's Missouri. It's a different city.
Well, it's still I don't know if it's still owned by the Hunts or not, but when it was owned by the Hunts, it was in Dallas.
Really? Wow.
Yep. We did a little trading for them a long time ago. One of their many hedge funds before they were called hedge funds. But they would speculate on anything reasonable and smartly, intelligently, because they had the capital to do it.
Right.
But anyway,
it all comes down to money management. They were doing it within their overall scheme, their percentage of bankroll risk, whether it's sports betting or investing. The only difference with sports betting and why people who go into investing need a little extra level of preparation, in my opinion, with sports betting, other than in-game. Now, you do a great job talking about pre-flop and in-game. That's why people can get in over their heads on in-game. But if you're playing a game tonight, like, the Cubs or Blue Jays that we mentioned, basically you have a predefined risk. You place that bet for $100. You're either going to win 100 or lose 100, basically. Where people with, like, BitCoin or something, I always ask someone, you need to have an exact exit plan before you even click buy. I mean, it's like you need to know what's going to get you out. And 95% of these people probably don't. And that's why 3 weeks ago on that day, on that Wednesday, the 19th of May, there was so much panic, because that's why that candle had a $13,000 range that day, from 43 to the low of 30, and then it closed like mid-30s, because people did not have a game plan. And you do not want to try to come up with a game plan at 8:50 a.m. Eastern on a Wednesday morning when your Bitcoin value just dropped $5,000 in 10 minutes. That's not exactly a clear critical thinking at that point. So
that's so true.
Have an exit strategy. And that's why I'm talking about these key support levels. Like, I think Bitcoin, now that it's broken above 40, 41, is more likely to hit 45 than to drop below 39. So I think there's a great risk reward in the next week or so with Bitcoin. And that's just purely from a technical angle. I don't have any I can't back it up fundamentally. I don't think there's any way to do it unless you know what Elon Musk is going to say tomorrow. And by the way, we got to mention that one of the reasons this did break out is he did say something again this week, hinting towards the fact that Tesla might once again allow Bitcoins to be used to purchase the cars. Just keep in mind, that's actually what made the big semi-crash a few weeks ago, was him once again saying temporarily, it was such a vague statement, temporarily he's stopping, the purchase of Teslas, even though his Tesla stock is more valuable because of Bitcoin, because they hold a lot on their balance sheet. So you knew at some point also I'd love to know if he bought more. I mean, it wouldn't shock me. I like Elon Musk, and I kind of like how he plays with the media and the markets, so more of it, man. I love it. I think it's great
I'm
stuff.
sure he's on somebody's government radar.
Yeah, and that's the thing. Is you get too big at some point. And by the way, I mean, it looks like they're starting to crack down on the techs. They say it's bipartisan. We'll see. I mean, there's some talk about coming after all of them. Apple, Google, Amazon. They're the three I think they mentioned. I don't know if Facebook was in there yet or not.
Especially Amazon.
Yeah, I think that's the one. That's the only one from a commerce perspective you could do something, and maybe some price fixing there. But what's interesting about the other ones, John, is I think the way it's going to work is, I heard a guy, and some Congress is starting to pick up on this, is that they're going to use the telecommunication angle with Facebook and even Google, I think. And I think that's an interesting thing, because you and I are old enough to remember, the big telecoms in the early 90s when we grew up. I mean, most people under 40 right now watching don't even remember this, but back in the 80s, you pay $1 a minute just to call like 2 hours from your house, like outside the local area for like a long distance. And now it's free on everything. But and then on top of that, you didn't really have a choice on who your long distance company was. I mean, you talk about a good racket at the time. But then they deregulated the telecoms, and that's why that's where Verizon came from. They were Bell Atlantic. Verizon was created, and that's what happened 100 years ago with Standard Oil, became Exxon Mobil, Texaco, all these different companies. So yeah, I think the fact that they're going to say it's a utility, a communication, basically, it's going to be their angle. I somewhat agree with that. I'm a libertarian. I'm all about free markets, so the whole monopoly thing is
I agree.
Kind of questionable for me, but I'm not also a big fan of big tech, and the censorship is what I hate. So we'll see what happens.
Yep.
Something to keep an eye on, though, if you're trading Amazon and those companies, though. It's a potential for them to roll over here in the near future.
See, now I'm saying it real quick, guys. I guess I just admire him so much, Rob Vino. But anyway, this is Endeavor, which is the UFC. I'm seeing nothing here. You have a lateral movement. Sure, there's a big red candle here, but it's really not big because it just went public over here roughly 3 weeks ago. So it's one that I like tracking. But I guess we can probably close the show out here, as I have Manny's Pub coming up. And Kevin Riley's one of our big loyal chat room people in Manny's Pub, and a lot of shows. I've seen him over WagerTalk, and
Kevin's great.
Good guy here to answer a question that has nothing to do with Bitcoin. But so let's see. Kyrie Irving is not playing, but there is talk that Harden is going to make a go of it, and I have no idea what's going to happen. It reminds me of when Anthony Davis tried to play out of desperation for the team, really, and this seems like a sign of desperation to me.
Yeah.
I can tell you that Kevin Durant in his career, when he's playing without one of the superstars next to him, going back to Westbrook, the Warriors, when he played without Klay Thompson and without Steph Curry, and now with the Nets, is surprisingly good, which means that the market may have overreacted in terms of the pricing of the Nets here and underestimating Kevin Durant tonight, which I would never recommend underestimating Kevin Durant. So we don't really know what's going to happen here until we get closer to game time and see whether Harden is 90% or whether he's 60% and hobbling. It's a hamstring injury. I just can't see it. I can't see him playing a whole game. Can you, Steve?
Well, and just to put in the market once again, this line at one point was Milwaukee -5 at its height. It's now down to 2.5. This is Milwaukee on the road -5, a team that was a home underdog just one game ago in Game 4.
Yep.
So, I mean, it's just insane what's going on. And I'm actually, This is the first time in a while. I'm on a 29-16 run in the NBA. I'm actually staying off the game tonight. It was too much uncertainty for me. But yeah, I mean, once again, you could have literally gotten in several points up or down on the side and total in this market, and it's not done yet. We still got several hours till game time. I do get the feeling, with Irving not playing now, that they maybe are rushing Harden back, and he's not 100%. So that's what kind of gives me some hesitancy here. But like you said, you still got one of the greatest players of all time in Kevin Durant helping out. And Milwaukee, kind of like the LA Clippers, they've been a very bipolar playoff team for several years now. So we saw this angle, we talked about it a lot this year. This angle in the NBA regular season, you just blindly take the value and play the team that was shorthanded. It won night after night. I mean, it probably hit like over 70% on the blind.
Yeah.
Now it's the playoffs are a different story.
Chasing injuries did not work.
But, here again, Milwaukee's won, 2 games straight, and now they're a hefty road favorite, more than they were at home in either game. I mean, Kevin Durant could do some damage, and he's probably worth a look on the player props just by default. I know I never like playing the overs on these player props because that's what the public does, and you're paying an extra point or two. But if Irving's out, if Harden's not 100%, how can Durant not single-handedly? And they might lose. It's not always a good thing. Jokic did that back in Game 3. He had like 60-some points, rebounds, assists, went over the 47.5, almost 20, because I used that as the free play on NBA Tip-Off last Friday. And they still got blown out. So when these guys have big games, they don't always win. But hard to picture a scenario unless the Nets are going to score 50 points total where Durant doesn't dominate tonight. Even if they try to shut him down, I'm not sure they can.
Just real quick before we sign off here, I wanted to just pull up the player props. And, for those that are listening, we start live in about 15 minutes on Manny's Pub, so I'm going to transition right into that, and this might be the lead topic going into that show. So here we have NBA and player props. Points. So here we go. Giannis is over 32.5 minus 113. Kevin Durant over 33.5 minus 113. So he's not really overpriced. I thought it might have dropped a little bit with the news, but I do not. This is DraftKings. Harden is not listed, and who can blame him? I mean, why would you put it up and he doesn't start?
Yeah. Well, the problem is all those props are based on they must play. So then Harden plays 1 minute. You would have to you bet the under just based on the fact he might not play his full minutes. I mean, there's no way they can put a prop up for that reason.
Yep. Yeah, so I guess another good show talking about markets.
Great show. Total. Don't undersell yourself. It was a great show.
Yeah, it's true. I've been told, Johnny. It was funny as hell, actually. We started these new shows now every single day to support sportsmemo.com and bring it along its way ahead of football, right? And it was the first one I was officially doing in this work endeavor, and I made a comment in the Slack asking well, if I'm having a guest on, is it okay to promote myself? And he writes back, he says, "No, shut up, say nothing," and then it's LOL.
LOL.
That's the advantage of being the host, And then I kind of, but you want to be certain. You don't want to be, you want to be respectful to the guests just as much as you want to promote yourself. But
yeah, I mean,
today was much easier.
You don't want to get on top of the car hood and start pounding and jumping up and down. But yeah, you mentioned it. Look, I'll promote you, man. You need to promote yourself. Sportsmemo.com, $2 Tuesday for John Ryan. A strong best bet tonight, and you get it for $2. Go to sportsmemo.com. If you can't invest $2 just from getting this information today and then getting a strong play on top of it, what are you wasting why are you betting sports? So see, I'll do it for you, John. That's how you do it.
I love it, man. I do much better like that.
I love it.
Yeah. And then even better would be if you went and made the commitment to the long term.
Yeah, exactly.
Which is an extraordinary value here. I mean, for guys that are betting $100 a game and up, this is a no-brainer. I mean, I'll flat out say it. 60% off, and you get the NBA playoffs for free, and you already know my track record. I would buy myself on that one for sure. I actually would do that.
You got to determine as a bettor, are you just looking for action? And nothing wrong with that. A lot of people are, and if you want a strong play tonight, you get John's $2 play at sportsmemo.com. But if you're looking to make money as an investment, and I think honestly most people watching this right now probably have that mindset because they wouldn't be here otherwise. Because we're not talking about a day trade for tomorrow. We're talking about where Bitcoin's going over the next several weeks, where the S&P is going over the next several months. An investment approach is a daily as a year-long subscription that gets you the plays every day. And whether it's John at sportsmemo.com, myself at WagerTalk.com, that is the best value because your cost of investment is lower and your profits will be higher. And you don't try to second guess when to hop on and off like a bunny rabbit. But each their own. That's why either way you're getting John's plays and my plays are the same ones we're using every day. There's no inconsistency on our part. We've been doing this for over 25 years each. You got to determine as a user if you want to be consistent. There's only so much I can do. I can't go to everybody's house every day and make them do it. I'd shake them if I could, but I can't do that. It's not allowed.
It's that old leading the horse to water thing.
Right, and you get right up there, you can't make them drink. Yep.
And some people drink too much too, but that's another story for Tony Finn.
It's another good point. They don't drink at all, or they drink too much. Balance.
Yep.
I'm going to close with balance. #balance.
There it is.
Close.
Steve, thanks for being on the show. I love this show every week. Hopefully we'll be able to do more as we get closer to football and drag football into the conversation, which will be great.
Yep, it will be.
So we'll look forward to the next time. Guys, bet with your head and not over it. Use common sense. There's always tomorrow. There's another bus coming around the corner. Don't force it. So for Predictive Playbook, sportsmemo.com and WagerTalk.com, may all the wins be yours. Well, it's still clocking.
It's like the old Naked Gun movies. Remember they go,
I don't know if it's off the air yet or not. I guess it's